Hello, welcome back. This is Disha Shah and I create videos on how to make, save and invest money. We can take a moment and acknowledge that I chopped off my hair. I just wanted some change and it kind of just makes me feel really sporty. So there's a life update. Today's video topic is a result of hundreds of Instagram DMs that I constantly get on which mutual fund should I invest in. Now, while picking a mutual fund or any investment option, the most important factor to consider is risk. Risk is nothing but the potential of losing money. What is your holding capacity? Can you hold through the ups and downs in the markets to see through the profits? Everyone wants high returns, but people often forget, and we've learned this in our mutual fund series, that high returns means high risk. You will always be the best judge for analyzing your own risk capacity. If you don't know how to do that, here are some simple basic questions you can ask yourself to understand your risk capacity. So I'm not going to get into the details of your risk capacity, but a big factor while considering risk capacity is age. Your risk capacity or potential to earn high returns is highest in your 20s. This is because you can stay invested through the highs and lows of the market and wait long enough to reap the benefits of compounding. If you don't know what compounding is, I've created a small video on it. It's one of the most important topics to understand when considering investments. So you'll find it in the description box or in the floating eye here. But I'm super excited for today's video, so let's not waste any time and let's get started. Let's get into my top 3 equity mutual funds for your 20s. I've created this list based on higher risk, higher returns category, but please do your own research or talk to an investment advisor of your choice before making an investment. And let's get started. Stay tuned till the end of the video to find out which mutual fund I invest in. The first one is FlexiCap. Now, this is a relatively newer equity-related scheme that SEBI introduced in 2020. FlexiCap gives the flexibility to the fund manager to invest across small cap, mid cap, and large cap companies in any ratio they may seem perfect, as long as 65% of the fund is invested in equity and equity-related instruments. Now, this is great for young investors because it lets you invest across companies of different sizes while reducing the volatility a little bit. Since this is a high risk, high return scheme, it is suitable for long-term investors who want to stay invested for at least 5 years. My second pick is Focused Equity Mutual Fund. Now, we all know that mutual fund is known for its diversification. While this diversification helps investors maximize returns while minimizing volatility and risks, it has a flip side. It can present certain drawbacks. For instance, when investments are spread across different sectors and many companies, the returns can also get limited, because not all sectors or all companies can constantly overperform simultaneously. It invests in only 20 or 30 companies across selected sectors and capitalizations. Even though these funds don't come with the advantage of diversification like other funds, they bank on the fact that these are well-researched and selected stocks. They are riskier than the mutual funds that invest in a larger number of companies but can offer higher returns than them. They also have other names like under-diversified funds or concentrated funds. These funds are best suited for investors with a higher risk appetite and longer holding capacity for at least 5 years. My third pick is Multi-Cap Equity Mutual Fund. Now, this is a more popular fund than the first two, so you probably heard of it, and it's also much easier to understand. Multi-Cap Equity Mutual Fund lets you invest across small cap, mid cap, and large cap companies according to relevant market conditions. According to SEBI, the conditions for multi-cap is that it needs a minimum investment of 25% in small cap, 25% in mid cap, and 25% in large cap companies. This mutual fund is great because when you pick just a large cap mutual fund or a small cap mutual fund, it has certain limitations. So if you picked a large cap mutual fund, even if the fund manager sees a small cap company that is profitable and wants to invest in it, is restricted from doing so. So if you have a higher risk appetite, multi-cap mutual funds gives the fund manager the flexibility of deciding between small cap, mid cap, and large cap. Also, there is something for every investor. If you are someone who wants to invest in a multi-cap but wants to still put majority of their money in larger companies, then there are multi-caps with a focus on large cap companies. If you want to invest in multi-cap but want to take more risk and invest in small and mid-cap companies, then there are multi-caps with a focus on small and mid-cap companies. There are also multi-caps with no particular focus, where you hand over the reins to the fund manager and let them decide what is best for the fund. So there is something for every investor and every risk appetite. This is definitely riskier than your large cap mutual fund. So it is recommended for higher risk appetite individuals and people who are willing to stay invested for at least 5 years. That concludes my top 3 picks for equity mutual funds for your 20s. You can find any of these mutual funds in any investing apps or your bank apps. All you have to type is the keyword FlexiCap, multi-cap or focused equity and you will find them. Let me know if you enjoyed this kind of a video where I kind of narrowed down according to different risk appetites or different kinds of mutual fund picks, or just any other request that you might have. Okay, time to reveal which mutual fund I invested. Are you ready? I'm ready. I invested in FlexiCap Mutual Fund. I have been investing for the past 5 months and I am super happy. I plan on staying invested with FlexiCap, and in the future I might consider also bringing focused equity into my portfolio. Yeah, that's me. This is in no way an advisor recommendation. Please do your own research or talk to an investment advisor before you make your investment. I'm just here to share my learnings and what I'm doing with my personal finance to inspire you to move your ass and start investing. If you enjoyed this video, make sure you hit the like button. Leave me a comment down below on what mutual fund you have picked for your 20s. And don't forget to subscribe to my channel and be a part of this growing community. If you stayed tuned till the end of the video, then the highest in me recognizes the highest in you. And I will see you in my next video.